Across the globe, student loans have become a vital part of how many people access higher education. For some, they represent opportunity, a way to pursue dreams that might otherwise remain out of reach. For others, they raise questions about affordability, equity, and the long-term cost of learning. In Nigeria, the introduction of student loans, that is the Access to Higher Education Act 2023, which was revised and reenacted in 2024, marks a significant step towards expanding access to university education, particularly for students from low-income backgrounds. Designed to provide interest-free loans through the Nigerian Education Loan Fund, that is the NEL Fund, the Act signals a growing commitment to supporting young Nigerians in their academic and professional aspirations. But as with any major policy shift, it invites broader reflection. How have student loan systems worked in other countries? What can Nigeria learn from global experiences, both positive and challenging? And how do student loans, whether in Lagos, London, or Los Angeles, shape not only individual lives, but national economies and societal mobility? This moment offers a chance to look closely, not to assign blame or declare success, but to ask meaningful questions. What does accessible education look like in today's world? And how do we build systems that support both ambition and sustainability? Welcome to Untangle. I am Amadine Obewe. All right, welcome back. We have been joined now by an expert. He is a seasoned lawyer, a legal practitioner by the name of Sunday Jattu Esq, a barrister. Welcome to the program.
Thank you. Good afternoon. Same here.
All right, so let's delve into this. Let's start from the basics. What would you say student loans, the Act and all of it entails, or the key provisions there? We understand this Act was initially passed, had a lot of complaints, and then it was is repealed the right word? Repealed. And then we have a new version. And as we speak, even disbursements have begun in a number of universities. So tell us the basics of it, how it works, so that the average person out there, be it a student, a parent, a prospective student, can know what to expect.
Okay. Good afternoon once again, listeners. It's really great to be here. And of course, it's I'm happy to speak about this particular topic because, I'm an advocate of equal quality education, you understand? So the loan act, the student loan act that was signed, the new one that was signed into law, that was in April 3rd, 2025 by the president. The purpose of the act is actually to administer funds to students and to also encourage what we call access to higher education for a sustainable higher education. And it's not just that, as well as vocational training, skill acquisition across Nigeria. The key provisions there is one key one, of course, that is germane to everyone, is the access to the loan. Now, the provision provides for loan to students in maybe they want to secure admission into higher institution, or they are already in higher institutions, maybe undergraduates that are already in institutions across Nigeria, but public institutions. Is not people students in private institutions are not allowed to benefit from it. It doesn't just stop there. The loan also give access to students to access vocational training, skill acquisition, so far it's in an institution that is licensed by the federal government. So that is the major thing that the loan provides. Also, the key aspect of it is the fact that there is now a board of directors, by the NEL Fund, which is the Nigerian Education Loan Fund. So this is a body created by the Act to administer the loans, to oversee the affairs of the board in general. And we could tell that one of the issues that the previous Act had was with governance. but now there is appropriate governance put in place for the management of the funds, even the disbursement of the loan to students and all. Then another key provision there is what we call General Reserve Fund. Now, the General Reserve Fund provides that the 1% of taxes, levies, duties collected by the Federal Inland Revenue Service is disbursed, is remitted into this fund. You understand? What's the purpose? To provide access to higher education for Nigerian students. And another key point, which we also really need to let people out there know, is that the Act provides that employers are expected to inquire from the fund, when I mean the fund, the net fund, about the loan status of every student or every prospective employee. So if I want to get an admission job into an institution or a government or any establishment, the employer is expected to inquire about my student loan status. The failure to do that is actually a criminal act. You understand? So some of these key things are actually vital to the growth and sustainability of education in Nigeria. And don't forget that Nigeria across the world is one, I think according to Unifund some times ago, that Nigeria has the highest rate of out-of-school children thereabout. So the access to education is key. And then having this act come up, and I must actually commend the president for doing that, because we've had previous government presidents without this initiative, and creating this is a loan to transform Nigeria at large.
All right, fair enough. I like that you pinpointed the aspects of employers and their own responsibility in all of this. It's good for everyone to know what their own role is. At the end of the day, if you do not do that, you understand that it's required by law. Now, let's move quickly to sort of break down what the differences are. We understand this act was already passed. Even if I'm not mistaken, it was even passed under the previous or the process had gone very far under the previous president. So what were the key changes? I mean, I know that some of the complaints were about the requirements, needing to get guarantors and all of that. So what else really changed, and why is this version perhaps a quote-unquote better version?
But the 2023 Act was had some challenges, ranging from the governance, the management of the body by itself, then the eligibility, the criteria, the repayment, and the loan itself as a whole, the coverage of the loan itself. So if we want to talk about the difference, we start with the loan coverage. In the previous Act, it's only the tuition fee, but now it's beyond the tuition fee. It includes even other institutional charges. It includes upkeep. You understand? When you are in school, you don't have to think of, what am I going to eat today? What am I going to eat in the afternoon? You have that upkeep money there, and then you just study. You understand? So that is one aspect. That is one significant change. Then the other change is the governance and management itself. Now, there's not separate governance and then management structure. So there is not a board of directors that see into this particular management of this fund, and then the directors are cut across various government institutions, from the Ministry of Finance, Education, Central Bank, even from representative from tertiary institutions, you understand, across Nigeria. So these also help in administering the loan and also the affairs of the net fund itself, which is the body. And then there is the net fund, which is a body corporate. Now, when we say body corporate, it means it has legal personality. It can sue and be sued. So you understand. So once an institution, a body, has that presence, that key thing presence in its operation, then you know that they have to be very careful, because they are liable with whatever they do. You understand. So another key thing is the issue of eligibility. Now, in the previous loan, it was a bit stringent. Now, there were demands as to the fact that your family or the individual itself had to have a threshold of 500,000 naira income annually.
Annually,
You
yeah.
understand? So
Less than, right?
No, it has to be
Okay.
500 and this thing. That there's a threshold before you can access the loan.
Yeah.
So we have people that don't even. I don't think so. I believe some Nigerians don't even end up to that. You understand, annually. So that means that those set of people are deprived. But the new act kind of resolve that they have access to the loan. And also the issue of guarantor, like you mentioned, there's no need for guarantor. All they need from you is provide your information, they verify it, and you're good to go. Another key aspect of it is with what is it called? The General Reserve Fund that I mentioned earlier. That was not in the other act. Then there is also I can't recall the name now. The application process is different now. Before you have to do all the paperwork. Now everything is online. You don't need to stress yourself. Just impute whatever you need to impute, and you're good to go. You understand? So the eligibility criteria is also very key in the changes that has already been made, and also the repayment. You understand? So it's different from what was obtainable in the previous act. So these are some of the significant changes that the new act rather, seek to actually come in place to attend to. So, and these are, I must say, very key in this overall success of the fund itself.
Indeed. So what are the penalties for defaulting on a loan?
Well, if you say penalties, the one thing is that you need to understand that once a student is given the loan, it signs what we call terms and agreement. It signs an agreement, what's it called? Loan agreement contract. You understand? Once that is signed and you default, maybe in payment and this thing, the first thing they do is they warn you. They issue a notice to you that, okay, you've defaulted, come and pay. If you fail to do that, there's what we call, they restrain your access to loan in other financial banks, meaning your credit record is spoiled.
Does this come after they know you have secured employment? Because I'm imagining someone who perhaps finished school and maybe is struggling a bit to get a paying job, and they're knocking on their door. You need to pay your loan when he's not even anything yet.
That is one beautiful thing about this new act. You understand? Once you graduate, you go for the compulsory NYSC program, and then the act now provides that it's after 2 years of your NYSC that the repayment starts. Although if you graduate and from NYSC and you have your this thing and you have the money to pay, you can voluntarily pay up. But the enforcement effort starts after 2 years. You understand? So they can't just come and pay. And then it's not something that you have to pay at a go. It's structured, it's calculated 10%. And that was why the issue of employers informing, in fact, even the students. For example, a student who, this is Nigeria, we have a high rate of unemployment. You understand? So if a student is unable to secure employment within that 2 years period, he can write to the fund, extend my repayment period. So they understand that, okay, you don't have this thing. In fact, the act also provides that the fund can even forgive the loan, some of these loans, maybe because the student their beneficiary now is dead, or maybe due to some extreme economic hardship, sickness and all.
Fair enough. You've really broken down the key provisions here. We'll go on a quick break now, and when we return, we'll delve into other aspects, and also particularly looking at the global perspective of this, how Nigeria places when it comes to how student loans, are dispersed and managed across the world. Don't go anywhere. We'll be right back.
Hey everyone, let's face it, our world today experiences numerous challenges. And guess what? Our community isn't off the hook either. Most of the world issues are either not talked about enough or never talked about at all. But here on Timeline, we've got you covered. We dive deep into issues that affect us every day, leaving behind footprints of wisdom, knowledge, and solutions. Think of it like a roadmap that keeps you on the track for success. So buckle up. Because in this new season of Timeline, we're taking another trip through the past, the present, and navigate into a more promising future. Again, we're talking solutions, people. And let's make one thing clear. This is not your average blah 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 convo. This is real talk with a side of inspiration and a sprinkle of wow. I never thought about it like that. I'm your host on this impactful ride. Together, we'll tackle the tough stuff, laugh a little, and find ourselves on the path to positive change. So what are you waiting for? Season 2 of Timeline will be loaded. Let's get started. Hop in and let's drive straight into the heart of issues shaping our world. Let's go. Oh, one more thing. Hit that subscribe button and let's take this ride together. Every day, amazing stories of hope and tenacity unfold across the globe. On Hued Hour, we dive into these inspiring tales and discuss the vital work being done in the humanitarian and development space. Humanity has never faced a shortage of challenges, yet we rise stronger through teamwork and determination. Though these remedies are often underreported, on Hued Hour, we advocate sustainable solutions. We bring you the latest and most impactful news on how lives are being changed. We engage with young change makers and experts who provide valuable insights into relief efforts and the challenges faced by local communities through a global perspective. Join us every Wednesday by 8 a.m. on Hued Network's YouTube channel as we embark on this journey of positive change.
Welcome back. This is still Untangle. We are talking about student loans. All right, we've been talking about the provisions there, and I just want you to break down if there are any. What so far in your experience would you say are the biggest misconceptions? Well, before you answer that, I do recall now there is something we wanted to point out also. Recently, we've seen that there's been some sort of investigation by the ICPC. And they were trying to flag some issues within the disbursement of the loans. So that bears into question. Now Fund, you say it's a legal body, can be sued and can sue. Who is responsible for the monitoring? Is it because it has to do with funds automatically falls within the purview of the ICPC? Or is there part of the act that provides for the watchers of the watcher, so to speak?
Like I said, it's a body corporate, and if you have that title, that distinguished title, which is the legal title to it, that means that you are answerable to any legal liabilities.
So it doesn't have to be expressly stated.
It doesn't have to be expressly stated in the act. And also, of course, ICPC, which is the Dependent Corrupt Practices and Other Related Offence Commission, and then EFCC as well. They are into EFCC financial crimes, ICPC corruption and other things. So definitely if there are issues as regards the management of the fund, they are the right bodies to investigate this. And really when you look at this particular thing, it all started from media reports that there are about 51 tertiary institutions that are deducting about 3,500 naira to 30,000 naira from the loans, students' loan that has been disbursed to them by the fund. That is itself, it's corruption, except they come and explain themselves how it is. And also there was a report that states that FG disbursed about 100 billion naira into the fund, and out of which only 28 point something has been disbursed, and then 71 point something is unaccountable for. You can tell that it's a necessary thing that most have triggered why ICPC need to investigate, and they did that. And in the investigation, of course, they called the stakeholders, and they realized that over 200 billion has already been received by net fund from different government agencies, including EFCC, donated, I think, about 70 billion into the account, you understand? So, and then out of which 44 has been disbursed to students in over 299 tertiary institutions. Now, the question now is, the issue now is the tertiary institutions. So, investigation is still ongoing as to how tertiary institutions, and don't forget that the loan is not credited, and that is one of the most misconceptions that people have. Is not credited into the account of the student, is to the tertiary institution, and then the tertiary institution now remits upkeep money, of course, for maintenance. That's what is remitted to students. So it is now how
it collects the other fees.
Yes, they collect other fees, tuition fee, other. It's supposed to be paid into the school originally. So it begs the question: what resulted into the deductions that they've been complaining, people that they are ongoing. So it's now left for EFCC, ICPC, all these, they fight crimes to oversee
the main things I just wanted to clarify is that they do have the jurisdiction to handle
of course, they do have jurisdiction.
And then the second thing you've just gone on to say now about misconception, about how it's disbursed, because what we're also hearing is that sometimes a student says they were told that there was delay in the process, so then they went ahead to pay their school fees or their fees because they want to be able to write exams or whatever, and then later on they are told that the loan did go through and now they have two payments going on at the same time.
Yes, I understand that misconception. One thing about I think before we talk about that, we should talk about the time frame for the loan itself. So once a student apply, it takes 30 days for the loan to be approved. Now, the fact that it is approved does not necessarily mean that it will be disbursed immediately. So there are still some other things, particularly with the particular availability of fund with net fund. So if they have fund, it also take another 30 days from approval for them to disburse. You understand? Yeah, quite well and good. Maybe based on the period the students apply. So there may be delay. Maybe, school is saying they have deadlines for you to pay or blah, 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 blah. I believe what the students could have done in that instance, students can do in that instance to write to the school that they've applied for this, you understand? Once they do that and then ask for, although that may not be possible because at times, they have a general portal closure thing. Okay, portal is closing by this period, blah, blah, blah. Students want enter skelter, blah, 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 to pay. So what students, I think the blame is on the students. When you know that you may not have enough funds to do this, why don't you apply earlier? And the application process is very easy. All you need to do is go to NEF Fund website. That is nef.gov.ng. That is nef.gov.ng. Go there, you say portal, apply to the portal, just fill your form, and that is once you fill the form, you submit it, and then there is a indemnity form for you to fill as well, complete, still online. You submit that, provide all your details, and what are the KYC that is required? Your JAMB registration form, your JAMB registration number, if you are a direct entry or fresh entry, and if you are an undergraduate, your matriculation number, then your BVN, your NIN, your personal details, and the photograph. That is all.
Fair enough. So are there any other major misconceptions you'd like to debunk?
Another major misconception is that, this is recent. The loan thing is very recent. So people don't really, some students some are not even aware of it. That is one. Some, even when they are aware, they doubt the efficiency or even the operation of it, the fund itself, whether it is something obtainable, even if they are eligible for it. That is a great misconception. One major criteria for if you are a Nigerian citizen. So for a Nigerian citizen, you are good to go. And trust me, the fund is credible, it's reliable, it's efficient, because so many people have actually received their funds. I've read some people saying they've received this, they've received that. Although with the issue of deductions, that is still ongoing. Let ICPC clarify that, and then that is all. You understand? So that is one misconception. People believing that is this not another government propaganda? You understand? So that is one. Then another misconception is they believe once I collect the loan, I'm not paying back. That is not possible. You have to pay. They said, if you eat something, you will definitely have to vomit it. So they have to pay. You understand?
Indeed, I had an interesting conversation with a student the other day, and I was trying to get his perspective on student loans. And his response was interesting. He said, "Oh, it's good what the government is doing. They are supporting some of us who want to do business." I said, I don't understand. He said, that's what the loan will help us so we can invest.
That reminds me of one thing that happened. I'm not going to call the senator's name or blah blah blah. This thing. So there was this senator that actually was so good with his constituency that it gives scholarship blah blah, and then he gave about some numbers of students, maybe 200K to access education, and the next day some are using it to buy iPhone.
It's interesting, really. So let's quickly go to the global aspect.
Okay.
How does the concept of student loans normally work, and what are would you say, the differences or the gaps needed to close to get to a functioning one? Even some of the most popular ones, a lot of school of thoughts will still argue that they are not quite effective, or they are still problematic. I'm talking about the real popular ones. And then there are some that people might not know about that work well in countries that might not have as much of publicity with what they are doing. So what would you say is the global perspective on this?
Well, the first thing is the 2024 Act had some major changes from the 2023. So when they brought up the 2023, they discovered that there are some things that need to be changed to meet global standard, and that was what 2024 came in. So we could tell that the 2024 Act is tailored with most of the international international standard. Other countries like USA, UK, blah blah blah. But there are still some variations, like you said. For example, in Nigeria, one thing I see as a defect, could be a defect, is the fact that the loan is to everyone. If it's to everyone, and you consider the shortage of funds, the most deprived may not benefit from it. Just like you mentioned that there was a student who had applied for the loan, but could still also around and still pay by itself. So that kind of student, I'm not saying he cannot access the loan, but I'm saying that it may deprive those students that don't have it at all. And when you look at that with what is operational in USA, you discover that their own loan fund in this thing is structured into 4. They have the direct subsidized loan. They have the second one is direct unsubsidized loan, the direct plus loan, and then the direct consolidated loan. Now the direct unsubsidized loan is for undergraduates, and it's expected to a student of that bracket is to have access to $12,500 every year. Now for tuition fee alone. If that student still want to go for another loan for upkeep, that is, it will key into direct plus loan. Now that direct plus is more stringent. So it's now giving gap for, if so far I can pay tuition fee, I think I should also around and get all that fee paid instead of still going to the loan. With that, it gives the bracket. So even USA, as of course, it's work power, they have money, blah blah. There are still some issues as regards availability of funds in order to cater for everyone. So all of these things give gap. And then when you compare it also with UK they have a maximum amount of money that you can earn, you can collect as a loan. So if your tuition fee, maybe your cost of study is higher, you bear the you build the difference. You bear the difference. Now also for them to repay back in UK, you have to have the a minimum threshold of money you've earned. But that is not in Nigeria. It doesn't matter if you've earned 1 naira, 5 naira. So far, 2 years after, you have to start paying once you secure a job. You understand? And when you look at also Kenya on is, of course, 2 years for repayment. But that one, if you are, there are some scenarios, which I think Nigeria to also look into. There are some scenarios where you will be studying with schooling and you also earn salary. There are so many scenarios like that. You understand? So for that purpose, students in Kenya, in that category, they pay 4 years after the loan is disbursed to them. So I think Nigeria to also look into that. That is not covered in our own act yet. So when you look at some of these things, it's clear that yes, fine and good, is the one that we have now is good, but we should still look into other things, the other aspects of it that is operational in other countries, and then extract some things and then put into our own.
Fair enough. Are there any other aspects that you feel people should know about? And to all stakeholders, I think we've spoken to people who might have interest in applying. We've also spoken to the government. And we even know in some countries, there are even loans that are not particularly domiciled with the government, sometimes collaborations with some other bodies and all
US does that.
Yeah, so
you understand, private. In fact, the US is not just they have the federal loan, student loan that is operational there. They also have the private sectors that key into it. You understand? The private sector can also come up and say, okay, we have a student loan set up, and that is also very okay. Even in UK, their own is even I can't recall. I think private company loan or something like that. I can't recall how they even structured that, how they call their own body. So that alone is also very, because the truth is, government cannot, should I use the word, be able to cater for everyone with this particular loan. We have over how many Nigerians, and then repayment is also there. Such like that is also there. Although there are aspects, there are measures rather government have put into place to ensure that the fund doesn't lack money. For example, the 1% that is being paid. Do you know the amount the money FIRS gets every time, and then the 1 million is being 1% is being remitted. That alone is also another thing. Then the loan also the act also provide for NEFON to invest. You understand? So they have this banking option, they have this business, this thing. So invest in this money, the one you have, invest it and make more money for yourself. So some of these things are actually also very good to also sustain it, because it's a different thing having to set it up and then not sustaining it.
Thank you so much, Barrister Sunday. It's been a pleasure. All right, we've really broken down this topic today and untangled it for all. I do hope all relevant stakeholders take the part that involves them and take it very seriously. Particularly for me, I think for employers out there, don't forget that you have a responsibility. You should definitely take that seriously. And that's how we end the program for today. Don't forget to join us every Monday by 10 a.m. Untangle comes to you. See you next time. Bye for now. I am Amadine Obewe.